Welcome to this month's Trader Connect. I'm glad to see you all here again. For everyone who's new, Trader Connect, this is just a webinar we have here at Rand Swiss once a month. And it's for anybody who's looking to do some trading, some short-term trading, and to bounce some ideas. I do predominantly technical analysis, so even though I make some fundamental comments on stocks or forex, it's predominantly I'm just looking at charting, putting on some indicators, drawing some trend lines, support, resistance lines, those kind of things, and then trying to make a call based on those indicators. Okay, but first things first, who are we and why should you listen to us? Well, for those of you who attend this regular webinar on a regular basis, I always speak about all these awards we've received. Before I continue though, they will have the Stockbroker Awards again next month. So if you are a client of Rand Swiss, we will truly appreciate it if you can go do a survey for us and just let them know what you think of us, because all of these awards, of course, we got because of our clients doing those surveys in the previous years and giving us a good rating. Especially this one, People's Choice Award. With all these other ones, they kind of listen to the clients, but Intellidex, they also do the kind of their own analysis. So it's kind of a 50-50 between what Intellidex thinks, what our clients thinks. But when it gets to the People's Choice Award, it is just 100% clients. What did the clients say about Rand Swiss? And we are very proud that we got this award in 2019 and 2021. We're very glad our clients were happy. So we'd really appreciate it if you can do the awards again. I will actually put the link. I'll remind you again towards the end of the webinar. But I just put the link in the chat. So if you would like to do the survey, we would really appreciate it. It will really help us a lot. But okay, anyway. So as you can see, 2019, 2021, we were voted South Africa's top stockbroker. 2020, unfortunately, we dropped to second, but luckily we came back first in 2021. This year, we would love to retain that first spot 2 years in a row, because unfortunately we couldn't do it in 2019 and 2020, but hopefully this year. 2019, we also got the award for South Africa's top advice broker. I spoke about the People's Choice Award. 2020, even though we did not get first place overall, we were rated the top online broker. So that was also a nice award to get. And then 2020 and 2021, 2 years in a row, we got the best tax-free savings account in South Africa. It is a very good tax-free savings account. It's minimal fees. I think the brokerage is like 0.25%, no minimum fees. We don't charge you anything. Our only requirement usually is just that you must have some kind of other account with Rand Swiss. But otherwise, that account is very low fees. You can manage it yourself. So you can log into the account, you can buy your own ETFs, or you can just say, you guys, please manage my ETF for me. And then we'll just put you into like a little ETF fund that we have. It's like mostly in the Signia S&P 500 ETF, but then we also got a bit in the property ETF. We've got some money in the Eurostox ETF, some money in the emerging markets. Yeah, it's about 40% is S&P 500. Okay. Anyway, so what do we do? Well, I mean, you know about online trading. This is what most of you guys do, the day traders, the short-term traders. You just want a platform and you just want to log into a platform that will give you access to the market. You want to trade some CFDs, some Forex, some commodities. That's online trading. We just give you the platform, you manage the account yourself. And the only thing you pay are the brokerage, no management fees. Private broking, these are the guys who want to do a bit more long-term investing. But they would like some advice. So they still plan to manage the account themselves mostly, but they would like to speak to a broker. They would to look at their portfolio. They want some advice on the stock before they buy them, or maybe they have something they want to sell. They want some advice before they sell it. That's private broking. Managed portfolios. This is where you just say, look, guys, it's like that ETF fund for the tax-free savings company. So I just want you guys to manage. Here's some funds, please manage it. We've got like an SA fund, we've got a global equity fund, we've got a UK fund, we've got a European fund. So basically, we just say, okay, well, do you want to invest in South Africa or offshore? Which markets do you prefer? And then we'll build you a portfolio, or you will probably go into one of our managed portfolios. Structured products, very good if you want to hedge against markets, or if you're a little bit more risk averse. They give you like good exposure to equity markets, but they come with capital protection. So for instance, we're doing one with Investec, which is like 100% capital protection. So it's 5-year investment. If after 5 years markets are negative, you get 100% of your capital back. You basically don't lose anything. You just take the credit risk of the bank. Okay, offshore transfers. You want to send some money out of the country. We do that by Investec for you as well, at a rate much better than you're going to get at your local retail bank. Wealth management, RAs, life annuities, life insurance, those kind of things. Or you just want to sit with a financial planner. We'll look at your age, your risk profile, all those kind of things, and it'll come up with an investment plan for you. That's wealth management. Tax-free savings accounts, we spoke about that, you know about that. If you have 36,000 Rand a year you want to invest, definitely put it into a tax-free savings account. I mean, if you leave it in the long term, you can get quite a lot of capital growth if markets perform like they have performed historically, and it will all be tax-free. You don't have to give SARS any of the gains. Okay, network and partners. So today, Velocity Trade. If you're a local trader, you'll have a Velocity Trader account. If you're offshore, you can use Saxo or Swissquote. And then all these media partners, just to show you, like, our guys are in the media regularly, especially Viv and Gary. You'll often hear them talk on 702. You'll see them on Business Day TV, on SABC News, E! News, CNBC Africa, Classic FM. So they do a lot of media. So yeah, always keep an eye out for Gary and Viv. They always give a lot of good advice. But okay, let's get to it. So, as I mentioned in the beginning, what is this webinar? This webinar is for you to bounce some trading ideas off me. I will look at the chart, I'll put on some indicators, and I'll make a call. But at the end of the day, it's just my opinion. I mean, this technical analysis, these indicators, they are never 100% correct. They just give you a general idea. So whatever I say, I'm by no means giving you a recommendation to go do this trade, to go buy this or to go short that or whatever. They're about only my ideas. So please trade using your own discretion. Do your own analysis, maybe listen to someone else, and do all those kind of things before you place the trade. These are not recommendations. While I'm on the topic though, if there's anything specific you want to have a look at, just put it in the chat. So we will look at both local and offshore equities. We can look at Forex, commodities, whatever you're currently having a look at. By all means, put it in the chat. I'll give you my opinion. But okay, let's analyze your trades. I'm going to start us off with the usual thing that we usually start off. So I know a lot of traders are Forex traders, and one of the most highly traded currencies is or currency pairs rather, is the USD because of its volatility. Okay, so since last month, if I zoom in a little bit, we can see that we've been seeing some Rand strength, or rather dollar weakness. And it came back down to 1620. Now, if we look at 1620, we can see that was previously, make it a bit thicker, it was resisted. 1620, that's like an area of resistance, found resistance, found resistance, found resistance, found resistance, finally broke through. Now, that level became support. It came down. That was when, so on this day, it was last week, America released their inflation numbers, and it came in lower than expected. Now, if inflation is lower than expected, the market expects, well, okay, the Federal Reserve in America They're not going to hike interest rates so much anymore. And this is good for risky assets like equities or emerging market currencies. South African rand, of course, is an emerging market currency, and that's exactly what happened. So there was a miss on inflation. It came back down. It strengthened till 1602. Boom, came back to 1620. Same thing happened next day. Came back down, boom, above 1620. Came back down, boom, right back to 1620. So this 1620 level seems to be acting as quite a strong level of support. So now we have to wonder, okay, what's next? And the news you want to look out for, not just with regards to this currency pair, but even for equities, is what is the FOMC going to say today? So the FOMC is the Federal Open Market Committee. They're in the Federal Reserve of America, and they're in charge of discussing, interest rates, for instance. And they have a meeting today. They're not going to raise or lower interest rates today, but they're going to have a meeting today. They're going to release the minutes of that meeting, and they're going to give people an idea. Well, okay, how hawkish or dovish is the Fed going to continue to be? So that's a very important piece of news to watch today. But yeah, as we can see, at the moment, the rand's kind of a bit stuck now. If we look, the next level is kind of there. 1680. 1680. So this is the range at the moment, 1620 to 1680. So 1620 is holding. It's clearly holding. There's 1, 2, 3, 4 days you tried to break below it, couldn't do it. Every single time it came right back up above 1620. So now that's the next level, 1680. But will it reach 1680? Well, that depends. Like I said, we have to keep an eye on that meeting today, the FOMC. If they come out and they say, we don't care about that inflation number from last week, we don't care that inflation came out lower than it expected, we're going to continue to be hawkish, we're going to continue hiking interest rates. Yes, 1680, very possible. However, if they come out and they say, well, inflation is tapering off, plus there's some data that's been coming out showing that the economy is going into a bit of a recession. It's usually when economies go into recessions, they begin to lower interest rates to kind of boost the economy back up again. So if they come out and say, well, inflation is clearly coming down, we see a bit of a recession forming, we're going to be more dovish, we're not going to hike interest rates as much anymore, we might not hike them at all anymore, then I can almost promise you the 1620 level is not going to hold, it's going to break. And then the next level you want to keep an eye on is right here, 1580. That will be the next level. So yeah, it all depends on what happens with that meeting today, right? Are they going to come out and say, no, we're going to continue being hawkish, rand weakness, dollar strength? And I can guarantee you it's not just going to be the rand. You can go look at the Euro USD rate. You're going to look at pound dollar. Any currency pair with a dollar in it, I can almost guarantee you the dollar will strengthen, the other currency will weaken. However, on the flip side, if they come out and say, no, we're going to be more dovish, we're scared about the recession, inflation is fine, then dollar weakness, everything else strengthens. Okay, so that's what you want to look at. If they do come out and say they're dovish, well, what can you do? You can open a short position on USD ZAR, put your stop loss. I won't always do it exactly 1680, maybe do it a few cents above 1680, maybe even 1690, and aim to take profit at 1580. I mean, that's not a bad trade. There's like 30 cents risk for what's that? That's 54 plus 20, 75 cents almost possible gain. So that will not be the worst trade. Question is, you can risk it though. I mean, you can always say, no, I'm not going to wait for the FOMC. Like the inflation did come in lower. We do see data of a recession. I'm almost certain that the FOMC will be dovish. I'm just going to open my short trade now. By all means, you can You can get a good level here, 75-cent move versus, sorry, 40 if we go to 90 cents. We have stop loss at 90 cents. But of course, what is the risk? The minute meeting, or the minutes of the meeting might come out and you might be totally surprised. And then the trade goes against you and boom. So there's always that risk. Do I place it now and possibly get more of a gain? But the risk is they can surprise me and it goes to my stop loss, or do I first wait? Because if you wait, you might not necessarily get at the same level. I mean, by the time you get to look at those minutes, you might already be back down to 1640 or 1630. So it's kind of like always that opportunity cost. But yeah, if you are looking at doing a short, like I said, put your stop loss somewhere above 1680, maybe 1690, with looking to take your profit at 1580. Flip side, if you're thinking, no, they're going to be hawkish, what do? Well, then you can open a long trade. I mean, the 1620 level seems to hold, so I won't put my stop loss at 1580. I'll probably put it somewhere below 1620, maybe 1615, 1610. And then you can look to take profit at 1730. Still also a good play. It's like an 80-cent move there. 1730 with a 40-cent risk stop loss. Again, same thing though. Do it now, wait for the minutes. You have to decide, do I want to risk it? Don't I want to risk it? Do it now, wait. It's for you to decide. But yeah, that's the USDR. Now, of course, that meeting is not just going to affect currencies. It will also affect oil. So what can we see? I think that's from last time. Okay, we'll I'll redraw that one. But we can see that. Oh yeah, sorry, I just want to say I've been having a bit of a dry, scratchy throat since Sunday. So if I cough a bit, apologies for that. But okay, so as we can see, oil has been weakening. When is this? This was since June. It's been trending down. And since the last webinar, again, it's been trending down. Now, why has oil been trending down? Well, the big reason has been, sorry about that, rising interest rates. So with the interest rate hikes, there has been fears of a recession. Many people have been of the opinion that the only way to fight these high levels of inflation in America, especially, or well, in the developed world, especially, because if you look at their inflation numbers and ours, I mean, in South Africa, it's kind of, I know the target range is, I think, about 4 to 6%. So it's kind of normal. In South Africa, I've seen inflation numbers of like 5, 6, 7%. But in the US, it's not. In the last decade, I mean, they had inflation numbers of like 1% or 2%. So these 8, 9% inflation numbers are very excessive for them. It's very like to the extreme. So yeah, as people, their opinions have been that the only way to fight this insanely high inflation would be to induce a recession. The Federal Reserve doesn't have a choice. They have to induce a recession. They have to calm the economy down. It's the only way they're going to be able to fight inflation. And they have been raising interest rates by quite a lot. I mean, again, if you look at the past decade at the Fed, when they up interest rates or they lower interest rates, they do it by like 25 basis points usually, 0.25%. But this year, they acted by like 50 basis points, 75 basis points. They're doing massive interest rate hikes. So a lot of people have been thinking, well, okay, they're inducing a recession. It's not good to hike interest rates by so much. And if there's a recession, well, that's not good for oil. Because, I mean, if there's a recession, less economic activity, less cars on the road, less trucks on the road, less things being manufactured, i.e. less oil being used. So oil has been coming down. And it's not just that, it's also like China with their zero COVID policy. For those of you who don't know what zero COVID is, basically China just decides if we find COVID anywhere, We're just locking the whole city down completely. Like happened to Shanghai a few months ago. I mean, people were locked in the offices. They weren't allowed to leave the office. They had to stay in the office for days. So that's China's like whole zero COVID policy. So whenever they do that, it's like, well, not good for the Chinese economy. And Chinese, of course, I think they're the second biggest user of oil. So oil comes down. But okay, so again, you have to kind of have a look at what happens in the FOMC this afternoon, our afternoon, their morning. If they continue to be hawkish, the Fed, that's not going to be good for oil. You will probably see oil continue to fall. If they become more dovish and they say, no, okay, we're going to not hike interest rates by that much or not at all, whatever, that will be better for oil. You might see oil starting to come up again. Oil will start to rise. Okay, but from a technical analysis point of view, what can we see? Okay. No, let me not do this. Instead of a line, I'm going to do a rectangle because support and resistance, if you've attended my webinars, I always say this, it's never always an exact line. A lot of the time, it is an area of support and resistance. So on oil, this was between $100 a barrel and $102.50 a barrel. This has clearly broken through. So, well, there we can see support, support, support at the higher end, support at the higher end, support, support. And then finally it broke through. And now what happened? It found resistance at the top end. So now this has become resistance. Okay, so for anybody who's long oil, this is not the best sign. That it came back, it retested this level, and it did not manage to break through, and it dropped. You can also clearly see, I mean, okay, let me not do a trend line. It's kind of sticking to this trend line as well. So while at the same time it was getting to the higher end of that resistance, it also hit the trend line resistance. So it does seem like this trend is really holding up on oil. So from a technical analysis point of view, if I look at oil, it looks like a short. It looks like it's in the proper downward trend. And a lot of it has to do with America, the UK, Europe. Everyone's hiking interest rates. Everyone is trying to fight high energy costs. Everyone is scared of recessions in the developed world. Developed world, they use the most oil, not good for oil. But okay, let's put like D. Okay, so there at least is a bit of a bullish sign for oil. Let me put the arrow. So oil going down, undeniable. You can all see that oil is busy going down. But over that period, what has been happening? Oil has been going flat on the MACD. It even looks like it's busy actually tilting up a bit. We all know what we're looking at here. If you're a regular attendant of these webinars, what we are seeing is a bullish divergence. So what's bullish divergence? It's if price goes down, but the indicator does not go down with it. It evens flat or it goes up. That's a bullish divergence. So that's usually a precursor telling you, hey, the trend might be changing. Keeping an eye on this. Let's see if we can find you an example of that. Yeah, okay, doesn't seem like not recently, but I'm sure when we look at some of the stocks, we'll find examples of where it happened, and you can see, oh, there the trend changed. So this is kind of telling us, look, the trend might be changing on oil, might be reaching the bottom of this downward trend. But if we zoom out, let's see, where would can find support? Okay, support's only at we look there, so it's about there, around $85 a barrel. So don't think just because there's divergence, it's going to immediately turn. It can very easily keep going down, and then once it hits 85, then the trend can change. But what this MACD is telling us at the moment is, hey, just keep an eye on it. Look for a change in trend. If you're short, maybe you want to close your position. If you're looking to go long, don't necessarily go long now, but keep an eye on it. You might get an opportunity to go long soon. If you don't want to do oil though, well, you have an option. You have another option. For anybody trading on the JSE, that option would be Sasol. Okay, now, of course, with Sasol, it's not quite that simple, because when you look at the price of oil, you're seeing dollars. Sasol, you're trading it in rands. So now there's a second level you have to look at. Okay, oil prices, USD ZAR exchange rate. Because at the end of the day, it doesn't help that oil prices go up, but the rand strengthens. So even though Sasol is earning more dollars for oil, they're getting fewer rands for those dollars. So it's kind of a bit tricky. But usually you'll see a very high correlation between Sasol's share price and the price of oil. Okay, so what do we see? Okay, so there's again, from year to year, it is moving up. Okay, so it's here. It was not necessarily going down. It's more like moving flat, in my opinion. But that's still a bit of a bullish divergence. I mean, there's still like a divergence between what you're seeing on a chart and what you're seeing on the indicator are two different things. So it is a divergence. It is a bullish divergence. So we're seeing the same thing happen on the Sasol share price that we saw on Brent. So if you don't want to trade Brent, because I know the Brent contracts can be a bit expensive. So I'm just quickly going to go back to Brent just to show you. So if you click on the Velocity Trader platform, this yellow purple block that says CFD, it will bring up the symbol info. So if you look at the symbol info, you go to lot size. You can see lot size is 100. So what that means is, when you're trading a Brent contract, you're trading for the value of 100 barrels. So whatever price you see here, you have to time it by 100. Okay. So let's say it's 95 to make the math easy. 95 times 100 is $9,500. Now, $9,500 times whatever the exchange rate is, the USD ZAR exchange rate. So now we go back to USD ZAR, 1650. So I mean, your total trade value is almost 160 or 160,000 rand whenever you do one. Sorry about that. Because you're doing 100. The total trade value will be 160,000 rand. Now, of course, there's a margin requirement. You don't have to put down the full 160 whatever thousand rand. I'm just doing quick maths, mate. You only have to put down 6.2%, but I mean 6.2% of 160,000 is still a lot of money. It's like 9,000-10,000 rand, which you have to put down to do the trade. So if you're saying, well, I don't want to put down that much money, well, then you have another option. You just trade Sasol, because Sasol's lot size is 1. You literally can trade 1 share at a time, 2, 3, 4, 5 shares. So it makes it a bit more affordable if you don't want to put down all that much money. So you can do a trade on Sasol. But okay, so going back, there's the bullish divergence on Sasol. I'm just going to remove this. Then there's a, looks like what is an area of support and resistance. So let's say from here to here. Quite a big area of support and resistance, but I mean, Sasol tends to be a bit volatile. Look at these big candles. Sasol is a volatile stock. But yeah, between 320 and 340, there's a 20 rand range, which is kind of like a support and resistance for Sasol. So if you're looking to go long, well, this would be the level to go. I mean, you're pretty close to support and resistance at the moment. But let's put another indicator on and see what happens. What's the RSI telling us? The RSI telling us not the best. So for those of you who don't know, the RSI is kind of telling you, like, is this a bullish or bearish at the moment? And if it's below 50, which it is, there you can get the reading 43.52. It's below 50, that is bearish. So the RSI is telling us you don't want to be buying Sasol at the moment. And maybe you don't. Maybe you want to wait for Sasol to get down here. Because once Sasol gets down to 320, you could possibly see the RSI drop below 30. And once it drops below 30, then that suddenly is bullish again. Then the RSI is telling us that Sasol is oversold. Now you want to be buying. So keep an eye on the RSI. Keep an eye on what happens to Sasol when it gets to 320. Because like we saw, this is the bottom of support. This can be a very, very good level to buy if we find that Sasol is oversold at that level. I mean, we at least already have a bullish divergence on the MACD, so that's not bad. What if we, one more indicator, Shimoku, you see that again is bearish. So there's another little bearish signal, but it's kind of a mixed one. I'm just going to change this line color. So it's a bit more visible. Okay, so yes, it is below the cloud. So that's your first kind of like bearish signal. Next one, big red cloud. So this indicator is predicting more bearishness for Sasol. But your short-term moving average has gone above your medium-term moving average. So that could indicate a trend change. Like the MACD, we saw that bullish divergence. And like I said previously, if you see a bullish divergence, that usually is a precursor for a change in trend. But what could be up? Oh no, okay. So then your lagging indicator is starting to move in between price, and you don't necessarily want to see that. So what that usually means is there is no trend. Like Sasol is just stuck in like a sideways channel. Which, if that is the case, then we have to look at, there's the bottom of the channel. We put it about there, 365. That's the top of the channel. So when Sasol gets to 330, you want to buy. When Sasol gets to 360, 365, you sell. And then you can trade that channel as well. I think a lot of people forget you don't need a trend to trade a stock or a commodity or Forex or whatever. Even if it's trading sideways, there's still a lot of trading opportunities. You just buy at the bottom, sell at the top, buy at the bottom, sell at the top. But yeah, for me, Sasol is a bit of a wait and see what happens. Even though there is a bullish divergence on the stock, RSI says bearish. The indicator is moving in between price. It just went above. So I'm getting a lot of mixed signals on Sasol. So yeah, for me, Sasol would be wait and see. Okay, let's go to the next commodity. That's also heavily affected by what the FOMC does today. Because there's a bit of an inverse relationship between gold and the US dollar. If the dollar strengthens, you will see gold weaken. So just like we saw the rand strengthen against the dollar, we saw the same thing happen with gold. Gold strengthened against the dollar. But now we have to see, well, okay, what happens today? If the FOMC says, yes, we're going to be dovish, well, great. You will probably see gold strengthen. If they say, no, we're going to be hawkish, we're going to continue raising interest rates, you can easily see gold go back down again. So what do? Well, 1,800. There's your area of support and resistance. So if you want to go short, yeah, you're pretty much at the level you want to do it. You don't want to wait too much longer. If you want to go long, you'll have to keep an eye on this level. You want to see it break above 1,800. But in all likelihood, like I said, if the FOMC minutes, the meeting minutes come out and they say we're going to be dovish, you don't even have to wait for 1,800. You can just buy now. Because I got almost guarantee you that if they're dovish, gold will strengthen, dollar will weaken, gold will strengthen. It's all about the meeting. But okay, let's stick to technical analysis though. Let's put on our MACD. Okay, so there was a divergence. Or was there? No, sorry, I'm lying. There wasn't. But at the moment, yes, there's no divergences. So if there's no divergence, then doesn't mean the MACD doesn't work. No. You can still read it. So the MACD essentially is a trend indicator. If it's trending up, it's telling you, oh, gold's in a bullish trend at the moment. What you don't want to see is gold going up and the MACD going flat or trending down, because like I said, that's the divergence. That's telling you, oh, the trend might be coming to an end. But at the moment, we're not seeing any divergences. So that's good. So the MACD is telling us at the moment, we can be bullish on gold. Let's try the RSI. Okay, RSI. It's a bit mixed, but there you go. There's a good example of it going oversold. Like I told you earlier, if the RSI drops below 30, then the commodity, the stock, the forex pair, whatever, is oversold. And there you can see exactly what happened. It started getting there into oversold territory, and then boom, gold strengthened. So this is not foolproof. Like, I mean, like you can see, it started going oversold like way up here already. And sometimes it continues going down a bit more, but then eventually you'll see it turn. So this is also a good way to see if the trend might be changing soon. You can see the same thing there. Gold went overbought. So what happens when it goes overbought? You go short. And if you went short, this would have been a very good trade for you. So you kind of have to keep an eye on these levels, overbought, oversold. They're not 100%, of course. Like I always say, these technical indicators, they're never 100% correct. They're not foolproof, but they can give you a general idea, a good enough idea. So you put on some more indicators, do some more analysis, check the news, and you can get a good enough idea of what's going to happen. But okay, so at the moment, where's gold? Gold, it went above 50, but now it's just, if you look there, 49.16. It's just dipped below 50. So that's not necessarily a bad thing. Just because it's below 50, because it's barely below 50. So it's not the end of the world. So, but yeah, it's kind of like difficult to read. Is this bullish? Is this bearish? Well, it's hard to say. It went bullish, but now it's a bit more difficult to say. Let's put one more. There you can see, if you've been to my previous webinars, I often mention how these clouds, in the Ichimoku indicator can act as support at resistance. And there you can see it hit the border and now it's trending down along it. So that is a bit bearish, but there are some bullish signals here. Okay, I'm just going to remove this line. First thing, yes, there's a red cloud, but as we can see, the red cloud is narrowing. And I mean, you can see what happens. If it narrows, boom, suddenly it's green and it's bullish. So that's bullish. Your short-term moving average is above your medium-term moving average. That's bullish. Your lagging indicator is above where price was 26 days ago. That's bullish. So getting a lot of bullish readings on gold at the moment. So you can risk it. It's the same, like I spoke about the currency trade. You can say, look, I'm getting a lot of bullish readings here. I'm not going to wait for that FOMC meeting. I'm going to open my long trade on gold now. And if you are right, if the FOMC does come out and they say, we're going to be dovish, that's going to be a very good trade for you to get in. Because at the moment, there's a lot of bullish signals on it. Flip side, the risk side, you get it wrong, and gold goes back down to 1,700. Then there's the other side, you can wait. So now I'm first going to wait for this meeting. I first want to know what the minutes are. But at that time, by the time you get in, gold can be back up to like 1,800 and you lose out on the $25 move. I'm sure you understand, $25 times 1650, whatever the rand is at now, that's like a 600-700 rand move you can lose out on. It's for you to call. You want to take a risk, or you say, no, I'm going to wait. I'm going to be more careful. You don't want to do gold. Just like I said, with Brent, you don't want to do Brent. Go do Sasol. You don't want to do gold. By all means, go pick a gold miner. We can use an example. Let's go Anglo Gold. Now, again, the same thing was that I said with Sasol. It's not quite that simple, because that gold price you saw there, that's the dollar price. Sasol, now you're trading in rands. So now you have to factor in gold price and the USD ZAR exchange rate. Because just like Sasol, they might be earning in dollars, and price can go up in dollars. But if the rand strengthens, it kind of negates some of those gains. But okay, let's look at Anglo Gold. Okay, so I mean, if we go back historically, all the way to last year in August, 230 seemed to be a good level of support. As we can see, about 230, now it's busy strengthening. Now, of course, some of the strength is rand weakness, because there's a flip side as well. I mean, even if gold weakens, but the rand strengthens, it negates some of those losses, because even though the dollar price is falling, they're getting more rands for the dollar. So yeah, that matters. But okay. So 230, that was support. And it held and it strengthened. So now where's the next level? The next level seems to be there. It broke through resistance as well. So it was about there at 250. So that's good for Anglo. I mean, it managed, well, okay, rather, let's not make a line. Let's make an area, because it looks more like an area. $250 to 260. So actually, Anglo is right at the top of resistance. You want to risk it, you can say, ooh, I'm going to go short, and then aim to take profit at 230. But again, it will be a bit of a risky trade, because I keep harping on about that meeting today, but it's an important meeting. And it's not just going to affect currencies and oil and gold, commodities, whatever. If they come out more dovish, it's also going to affect equities across the board pretty much. Should go up. Anglo Gold is an equity. So you can see gold price strengthening. And even though you might see a bit of rand strength, you will see the equity strengthen, equity prices. So Anglo might actually manage to break through this. And if that's the case, well, what do? So there's the next resistance. So what do? If you want to go long, I won't put my stop loss down here. I'll put my stop loss somewhere below this area here. So just below 250. So let's say 247.50, you know, 247.50, 245, somewhere like that. So that would be a 12 Rand 50 to 15 Rand risk. Stop loss, but you can take profit at 290. So that's a nice 30 Rand move. So it's kind of like twice your risk, basically, what you're doing there. Open your trade at 260, take profit 290, stop loss 247.50, 245, depending on how safe you want to play it. If you want to be really risky, put your stop loss at 250. Then it's only 10 Rand. 10 Rand risk, 30 Rand gain will be quite the move. Okay, I think we're going to move to offshore stocks. If there's anything locally you want to look at, just put it in a chat. But it doesn't seem like anybody wants to check anything local. So I'm going to move to. Okay, offshore, DMA. If you open an offshore account with Rand Swiss, like I said, probably DMA, maybe Swissquote, probably DMA. This will be the platform you're using. So let's look actually at I'm just going to look at an ETF. So for those of you who don't know, the S&P 500, it's like in South Africa, we've got our top 40 index. In America, they have the S&P 500 index. It's the 500 biggest companies listed on different stock exchanges in America. Okay, so as you can see, there's been a bit of a recovery. But now today's meeting is very, very important. Well, first thing we can see, this ETF, which basically, I mean, if I'm saying ETF, we're basically talking about the index, because this ETF tracks the index. It might be a slight tracking error of like 0.01% or whatever. But basically, this is a reflection of how the S&P 500 index is doing. And right now, it's at resistance. So this FOMC meeting today is very, very important. If it's hoping to break above resistance, then it's going to need some help from that meeting. It's going to need the FOMC to come out today and say we're going to be dovish. If they're dovish, I can guarantee you S&P 500, like I said, equities will go up. S&P 500 is an equity index. It will go up. But if they come out more hawkish, well, then suddenly, I think this resistance will then hold. And then suddenly you will see the S&P 500 index fall. Okay, any offshore stocks you guys want to look at? I'll start us off with Amazon. Equity CFDs, whichever, if you're a trader. Okay, so Amazon at least looks good. Because there we can see just put that. Okay, so there you can see now our support right there at $140, $140 a share. And look what happened. Amazon broke through it and it seems to be holding, it seems to be staying. So Amazon is looking like it might be a nice long trade. We do go longer. What's the next level? 160. So it's about a $15-ish move for you there. Let's put on an indicator. MACD, good. MACD is looking good. Not seeing any divergences. So that's good. MACD is saying, no, we still got a nice big bullish trend there. That is good. Let's try Ichimoku. Same thing, very bullish. The cloud, I know they color it a bit differently, but the orange cloud is bullish. This dark brown color is, or well, this brown color is bearish. But what can we see? Short-term moving average, way above the medium-term moving average. Your lagging indicator, way above price. So we're getting a lot of bullish readings here on Amazon. But yeah, again, it goes back to that meeting because Amazon is a tech stock. And if the FOMC comes out and they're hawkish, I can guarantee tech stocks will feel it the most. Because tech stocks are growth stocks. They're all about the future income. And higher interest rates, yeah, it does not bode well for tech stocks. So that meeting today is very important, especially for tech stocks. All equities, of course, it's important for all equities, but of those equities is the most important for tech stocks. Amazon is a tech stock. So yes, this meeting today is going to be very important for Amazon. But if we look at the indicators, well, let's look at more. One more. This, yeah, it's not really. It went overbought, but it's now back below 70. So it's not really considered overbought anymore. But at its current level, it's not going to take much for it to go overboard. So that's one kind of bearish signal on Amazon. But everything else, the MACD, the Ichimoku, you look at your support and resistance lines, they all look very bullish. So most of these signals are bullish. Okay. So I'm just going to leave the Ichimoku on. Let's have a look at a bank. So let's look JP Morgan. There, JP Morgan. So JP Morgan, of course, is not a tech stock. This is more of a value stock. So value stocks and tech stocks kind of work a bit differently. But as a bank, they tend to do a bit better as well when interest rates go up. Because why? Banks earn a lot of money from interest. They lend out money. You put money in a savings account, whatever. They charge interest. They earn interest. So banks earn pretty well when interest rates go up. So this FOMC meeting today might affect JP Morgan a bit differently than it's going to affect Amazon. If they come out and say they're going to be more dovish, it's not necessarily going to be bad for JP Morgan. Because, I mean, even when the economy is booming, they still make good money. I mean, when interest rates are low, more people are borrowing money. So they still earn good interest, but they just earn less interest. Whereas if interest rates go up, yes, again, now they're earning a lot of interest, but it's more expensive for individuals and companies to make debt because they now have to pay more interest on that debt. So they still make a lot of interest. It's a bit complicated, but yeah, you will see JP Morgan react a bit differently. However, if we look at it now, JP Morgan is looking bullish. The gap between the short-term moving average and the medium-term moving average is not as big as we saw on Amazon, but it is. The short-term moving average is still above the medium-term moving average at the very least. Yes, this cloud is bearish, but it is busy closing. It's becoming smaller. That's bullish. Short-term moving lagging indicator above where price was 26 days ago. That's good. That's bullish. What do we see here? Going up, no divergences. That's good. That's bullish. Let's put RSI. Oh, Sorry, there's the RSI. Bullish. I mean, yes, it's trending. It's getting a bit close to that overbought level. But at the end of the day, it's not there yet. It's trending up. Maybe you can test the support. Remember, I told you guys the border of this cloud can act as support and resistance. There again, we can see that. Got to the border, found resistance. So it can very easily come, retest, and go up. See the RSI come down. It's not necessarily going to go into overbought territory, but at the very least, right now, the RSI is bullish. Okay, so what do? I'm just going to take this Ichimoku off. Now what you want to do is you want to draw your support and resistance lines. Okay, so there's the first obstacle they may face. And then that seems to be where you can find support. So yeah, it's the problem. If I look at this JP Morgan trade at the moment, the problem is it might be too late to get in now. Because you wanted to get in at least below 120. So if you wanted to open a long trade on JP Morgan, I'll probably wait for it to retest. Because like you guys remember that cloud came down a bit. So you can test that support, come down again. But if you can get in for JP Morgan below 120, put your stop loss, I won't say 115, not even 116 is about where it is. So 114, 113, and you can aim to take profit at 130. So at a $6-ish stop loss gap, $10 possible gain. Not the worst trade. But yeah, like I said, still, what do you want to do? Keep an eye on that FOMC meeting today. It's going to be a very important meeting. And as a trader, you definitely don't want to miss it. But okay. Thank you for attending this webinar. If you want to attend any other webinars, I'll quickly share this with you. Just go to randswiss.com, click on events, and then you can get our full list of webinars. Gary did one yesterday. Next month's Trader Connect will be on September the 14th. Gary's next one will be September the 7th. And then we have got one with Anthony Clark. If you don't know Anthony Clark, he is one of South Africa's top-rated small cap analysts. So I would highly recommend, if you want to look, if you're interested in investing in small cap and mid cap stocks, I would highly recommend attending this webinar with Anthony Clark. It will definitely be worth your while. Okay, okay, so just one final one. Someone quickly wanted to know Devon Energy. Okay, Devon Energy, well, horizontal line. You can see there, it's a bit at resistance. Put on your MACD. That's bullish. I'm just going to put on the Ichimoku. Not very. Okay, so it's at resistance. Like I told you guys, the border of these clouds can be resistance. Me, short term is at least above, but I think it's looking a bit difficult now. It's at a very pivotal point. And as it got here, it sold off. Even though it's a green candle, it's not really a green candle. It closed the day below the previous day's close. Next day, red candle. So yeah, it's really struggling here at $65 a share. It's kind of a wait and see what happens. If you want to go long, I would probably wait. I want to see it break above resistance before I do anything else. I would not buy it at this level. If otherwise, if I have to buy it, I'll buy it down here. Horizontal line. There, $55 a share. That would be the next level. Or not even, actually, I'm lying. Let's move it down. 50, there we go. So $50 a share. If I see another red candle, I'll probably even go short and look to aim to take profit at 50. But to buy, I won't buy it unless I can buy it closer to 50. Or if I can see it breaks above resistance and it stays above resistance. But yeah, that's Devon Energy for you. Okay. Yeah. Thank you for attending, and I guess I'll see you guys next month, 14th, if I remember, 14th of February. If you wouldn't mind doing that survey for us, it would also be very much appreciated. The link is in the chat. Or if you can't find the link, just send me an email, chris2@roundswiss.com. I'll happily share the link with you. Otherwise, have a good day, and I'll see you guys next month. Goodbye.